Vaibhav, in today's session of Market Movers, we will take a look on the USD if there are any emerging trading opportunities as bulls are taking charge and we are seeing USD surging against most of the major currency peers. After the release of non-farm payroll data, we are likely to see this momentum continuing. So we will see if there are technical reasons also to believe in this bullish story unfolding in the USD. If you consider the trading context for the day, there was not much of a data release for Asian trading session and even for the European trading session. But for North American trading session, just a while back, we got the employment figures both for United States as well as Canada. And prior to that, if we consider the equity segment sentiments, these have been mildly bearish in today's session after a steep decline in the Nasdaq in yesterday's session and also the accompanying decline in the S&P 500 and Dow Jones is still exerting pressure, though the losses in today's session are a lot more muted, and we are seeing sideways to bearish momentum continuing in most of the major equity indices around the world. And as the US session is going to get underway, we are likely to see these sentiments prevail in the US session as well. Now moving on to the non-farm payroll data, we got these job additions of around 1.37 million for the last month, and this is of course a bit better than the expectations, and particularly for the unemployment rate, which has declined substantially to 8.4 compared to the expectations of close to 10 reading. Even for the prior month of July, we had the unemployment rate at 10.2. So this is an welcome development for the US policymakers as many of the employers have started to hire back. Of course, the concerns surrounding the coronavirus pandemic are still there, but economy is reopening to some extent and people are participating while taking up the jobs. Participation rate has also slightly, actually the participation rate now stands at 61.7, which is slightly higher compared to the prior month's participation rate. So on that count also the improvement is there. Now moving on to the Canadian data. Here for Canada, we are seeing the job additions of 245,000 and for the Canadian economy, the participation rate has also slightly improved, whereas the unemployment rate has gone down, but not as much as for the US. For Canada, the unemployment rate now stands at 10.2% compared to the prior month's reading of 10.9%. So for Canadian economy also there is improvement on the labor front for the month of August. Now let's move on to the technical outlook. Here first we will consider the USD JPY and then we will see the technical analysis for Euro USD. Let's start with the USD JPY's technical outlook first. This is the daily time frame chart and this consolidation which has been ongoing in the USD JPY is increasingly looking solid, and as I said the bulls are taking charge and the bullish tendency is likely to push the USD JPY closer to this prior swing high, which is also the 61.8% Fibonacci expansion of its prior rally, starting pretty close to 104 and extending towards 107. And now here on the levels close to 105 we have this double bottom kind of formation in place, and also this EMA structure is also pointing to the continuation of the bullish trajectory. If we get the confirmation of 10 EMA above, crossing above 20 EMA, and that will give us one more reason to believe in this new possibility of USD JPY continuing to rise for at least couple of sessions with immediate target coming close to 107. If you consider the 4 hourly chart, not much has changed from yesterday's session. In yesterday's session, I had talked about going in for buy trades anywhere close to 106. So if any of you had gone in for that trade in yesterday's or today's session after this decline, I think you might be sitting on some profit. And also we saw initial jump in the USD JPY on the higher side after the release of non-farm payroll data, and that should increase the profit if you had gotten entry close to 106 levels, anywhere in the price band of 106.0 to 106.10, as we had talked in the yesterday's session. Even now, I think if in the latter part of today's session, if we get any similar opportunity, and as long as the price action is holding well above this central pivot point of this month's pivot point series, I feel we can continue to look for the buy opportunities, buy trades, and on the higher side, we can expect the USD JPY to rally towards 107 in coming session. So looking at that possibility, we can indeed take the risk, and risk is not likely to be much larger, or given the fact that we will be going for the stop losses anywhere in the vicinity of this prior swing low. The regression curve is almost flat now after this consolidation phase, which has lasted for almost more than a month now. We have seen this flattening of regression curve, and unless and until there is a significant move on the either side, we will see the regression curve holding in this sideways manner only. If we were to take into consideration the confluence of this 50, 100 and 200 SMA, we also have this support zone shaping up closer to 106, and also if we consider the price action channel, we have the support again coming in close to 106. So for us, the 106 level can be considered as a crucial marker, and as long as the price action is holding well above it, I think we will have all the reasons to believe that after due consolidation, the USD JPY is likely to resume its upward march. But of course, nothing is certain, nothing is 100%, and to provision for that, we will have to, of course, go for a stop loss. And I think the stop loss anywhere close to this prior swing low, which is there around 105.60, should hold well. And even if we shorten the stop loss, and a stop loss anywhere close to 105.7 to 105.80 should also do well. And I think we are not really likely to see the decline to that extent if the bulls hold on to the recent gains. But of course, as I said, it's not like totally certain, so we need to provide for the stop loss in case our anticipation go wrong and the USD JPY breaks on the downside. So here with the stop loss of around 40 pips, we will be able to target almost 100 pips on the upper side, and the target can be kept closer to this prior swing high, which is pretty close to 107. So for the target anywhere close to 106.80 to 106.90, we can continue to look for fresh opportunities to buy on today's setup of this SMA crossover. Now moving on to the Euro USD, let's see how things are unfolding in the Euro USD. This is the daily time frame chart, and Euro USD has been on a upward run for almost a couple of months now, and in today's session it has consolidated well closer to 1.18 level, and it has indeed found some buying momentum and rebounded from those low, but after making a high closer to its important price marker of 1.20, the Euro USD has sharply turned lower, and I feel it is might indeed be due for a correction after rallying extensively. And here, even if we simply consider this consolidation phase as the start of new upward momentum, from there also the Euro USD has run substantially higher, and if we get a correction anywhere toward 38.2% Fibonacci retracement of its prior rally, that would still keep the Euro USD in the bullish technical setup only on the daily time frame, as we won't be really seeing turnaround of sort simply because the Euro USD has entered into a correction phase. And if we consider this Fibonacci expansion setup here also, the Euro USD has completed the 100% expansion, and now it is consolidating closer to this 100% Fibonacci expansion level. So here we need to watch out closer to the 1.18 zone for the further clue via to determine which way to go in the Euro USD. But after this sharp sell off, I think the price action is pointing to the continuation of downward momentum in Euro USD given the magnitude of sell off. So we will see if there are any emerging opportunities to go short in Euro USD in today's trading session. Here the pivot point series central point is there around 1.186, and in today's session it has acted as a resistance on the upper side, and on multiple occasions we have seen Euro USD finding it difficult to cross above those level, and then eventually declining towards 1.182. And now, as the things stand, I feel we can utilize this central pivot point as a crucial marker to determine whether to go short or whether to sit on the sideline. I'm not saying whether to go long simply because I believe now the Euro USD is entering into a correction phase, so it won't really be prudent to look for fresh buying opportunities, not at least till further consolidation takes place. So here we have this central pivot point as well as the middle band of this regression curve, which are kind of telling us that it's the time to take caution, and if we want to go for a trade, it should be on the short sell side, as that will give us bear more probability of ending in profit rather than now going for fresh long positions. So moving on to the hourly chart, we have this price zone of around 200 SMA. Also, the prior swing lows of this consolidation phase, and then there is this 100 SMA passing close to 1.188. So taken together, we have multiple factors to believe that this price zone just little below 1.19 would be of crucial importance for determining the fresh entry points in the Euro USD. And as things stand, I think an entry point anywhere close to 200 SMA should be good enough for trading opportunities to be exploited in today's session, and the stop loss will need to be kept a bit wider, as we are looking for making good amount of money in case things go in our favor. So for that purpose we will have to keep the target price away, and that will kind of increase the risk also, as we will have to provide the equivalent or half of the target as our stop loss, as we mostly go with the stop loss to target ratio of 1 is to 2. So here if we are looking for the entry anywhere in the price band of 1.186 to 1.187, I would say that the stop loss anywhere close to 1.192 should do well and keep us protected in case our anticipation don't really come true, and rather it goes wrong and goes on to hit the stop loss. And for the risk we are taking, we can expect the fresh break below this immediate swing low, which is there around 1.18, and the Euro USD I am expecting to move towards 1.175 and eventually towards 1.17. So in such scenarios, it indeed looks like a good idea to continue to look for fresh opportunities in today's trading session to go short in the Euro USD. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. See you on Monday. Goodbye.